Hi, my name is Michelle Holmes, and welcome to another edition of CMS Forex News. Today is Wednesday, May 7, 2008. European retail sales declined 0.4% in March from February and were down 1.6% compared to March of last year. It's the poorest annual reading since records began being kept in 1995. Consumers curbed their spending as high prices for food and fuel ate into their purchasing power. German factory orders also had a weak March. Orders were down 0.6% on the month and 5% on the year. There was a decline in domestic demand for both investment and consumer goods, though orders for exports to Asian markets helped offset some of the losses. The euro-dollar pair, after advancing the first two sessions, swung about 200 pips lower from its Tuesday's high. The euro was already heading lower prior to the fundamental release, and the weak sales accelerated its losses. After the U.S. Open, the pair was testing support near 1.5350, a 6-week low set last Friday. The euro fell versus the yen following the news and continued falling during New York trading. European stocks were generally higher, but the weak fundamental data overshadowed the rally. From its high prior to the release, the pair climbed 100 pips in the yen's favor. In the UK, the nationwide Consumer Confidence Index missed expectations, falling 7 points to 70 in April. It's the lowest figure since polling began May 2004. Just like in Europe, consumers complained about higher food and energy prices. In addition, the struggling housing sector only adds more pressure to households who are seeing the value of their homes declining. UK's industrial output levels fell 0.5% in March compared to February, dragged down by declines in electricity, gas, and water production. Manufacturing, the key component, also declined 0.5%. Production has been mixed this year, but demand will slow as global growth goes through a downturn. The pound was pressured overnight by the consumer confidence data, and its losses continued after the production data. The pound-dollar pair swung more than 220 pips from its open, breaking through support at 1.9650. It found new support at 1.95 in New York morning trading. In the U.S., labor productivity increased 2.2% in the first quarter, as firms cut staff hours and squeezed more output out of fewer workers. Payroll data has shown that the economy has shed 260,000 jobs so far this year. Labor costs cooled, rising 2.2% compared to the fourth quarter's 2.8%. A loose labor market and increased productivity should keep wage inflation in check in the near term. Pending home sales declined by 1% in March, matching forecasts. The report from the National Association of Realtors says that sales will be flat for the next couple of months before improving over the summer. Any recovery hinges on access to affordable loans, which is being held back by restrictive lending requirements as a result of the subprime mortgage meltdown. The dollar recovered yesterday's losses against the yen in a 150-pip rally before testing resistance near 105.50. U.S. stocks were trading choppy in the first half of the session, with the three main indexes, the Dow, Nasdaq, and the S&P, in the red at noon New York time. The pair was consolidating after hitting its intraday high. Both New Zealand and Australia post employment figures later today. Germany will unveil its trade balance and industrial production data overnight. Tomorrow morning, the Bank of England and the European Central Bank will decide on rates, with both expected to hold. Canada posts housing starts numbers, while the U.S. releases weekly jobless claims and wholesale inventories. That wraps up the day in Forex News. Join us here again tomorrow at cmsfx.com.